Good morning, Dave Johnston here with Day Trade in the Markets. It's just been filled short here. Four contracts in the January crude at 51.94. So I want to go ahead and put in some stop orders, etc. Um, so the first order I'm going to put in is to buy back two of these contracts down here. We're going to go for 10 ticks here. So 84 is our first objective. So I'll just put that in there. And as far as our protective buy stop goes, I'm going to put it above this most recent magenta bar here at high at 52.01. So I'm going to put it in at 52.04. So we do have a 10 tick risk on this trade as well. So that's where we're at on this crude trade. We actually tried to buy this earlier in the day, the previous recording, if you've seen that. We did get stopped out twice and we only did one contract because it was kind of volatile, so just played it, on the light side as trade waiting was concerned. But I think the sellers have certainly taken over today, so I've gone ahead and gotten short the four contracts. So it's just coming down here fairly close to our objective at 84. Just hit one, I think 86. So hopefully we'll hit this shortly and we'll be able to make an adjustment on this stop. I'd like to see this green bar. Of course, the magenta bars, if you haven't seen our software before, the magenta bars here are very aggressive selling. We got three of them here as it sold off. It's very aggressive selling, the most aggressive selling that we have. So since the market's made a high here, it's come down, with good strength and good aggression. So um, that's why we got short on a bit of a pop up here to that resistance area near the top of, well, it's kind of a combination between this red bar that we had here, this magenta bar, and this magenta bar. So it just got down. What did it hit there? It hit 85, it looks like. So just within a tick of our first objective. So um, I think what I will do is I'm going to go ahead and lower the buy stop to just above this buying bar here because I don't want that high to get taken out. And that's at 95. I'm going to bring this right down to 96. 96, 97, 96. Just one tick above that bar. So we're only going to risk two ticks on this trade. Keep the stop pretty tight just in case it does get a bit of a reaction because as you can see we did come down here. This was Friday's high and we've just touched into it and turned here, it looks like, or at least trying to. So didn't quite hit our first objective. Maybe we can get another dip here and do so, but in the meantime I've reduced the risk to only two ticks on this trade. So that's pretty good. We are in for four, so we're only risking 8 ticks total on this trade at this point. So I think we're looking pretty good still. It's okay. It's okay. Good. Just came back down, hit our price. Okay, we just got filled on that. So I'm going to go ahead and put in a marker right here for our fill on that. And that was at 84 right here at 84. And I'm also going to put a marker in at our entry, which is right here. And I'm also going to adjust the stop down to just two contracts now because we just have two left. And let's see here, we're going to bring that down to break even. So we'll put that right at break even there. So that's our entry price at 51.94, as you can see. And let me just get, what am I doing? It's the cross over there. Doesn't want to. There we go. So that's our first objective filled and our stop. We've got those marked in there. So we still got two contracts on board with a break-even protective buy stop on this short order and just picked up at 10 ticks each on the first of the two. So this is a pretty bearish environment. This is one of these kind of tricky trades. I call them conflict trades because the market has been in an intraday up auction, which is why I was trying to buy it earlier. But the sellers have really taken over here. And when you've got really good seller strength, even when it's against the intraday auction, I really find that's really what you need before you go ahead and make a trade. And so we do have that today, and that's why we've gone ahead and gotten short here. Obviously, the low of the day is the next target down in here. So I think what I will do for at least one contract, I'm going to go ahead and put in a buy limit down in here. And let's put that, okay, 73. We're short from 94. I'll put it at 74. That'll give us 20 ticks on that. So, and I'll go ahead and put another marker in there just so we know where that is, just in case it spikes down there and gets filled. We know at least where that order is. So I'll go ahead and pause the recording and pick it up as the market dictates. Okay, just resuming the recording. We just got stopped right here at break even on the second two contracts. So the four contracts that we traded, two of them were break even and the other two were 10 ticks each for a total of 20 ticks on that trade. I need to cancel that order there. So that's how that trade went. Now, the thing that I was hesitant on, of course, is the gap opening. We've come down here and tested into that. A lot of heavy selling in here. If this selling can get rejected, we're going to have a nice opportunity on the long side. So we'll just wait and see if that sets itself up. In the meantime, that's it for this trade. I hope you enjoyed it and maybe even learned something. So thanks for watching. If you want to contact us, our email is info@daytradethemarkets.com.